Alright guys, so welcome back to this YouTube channel. So in today's video I'm going to be teaching you how to draw your market structure. I'm going to be showing you the entry in which I use when trading this structure, and I'm going to be showing you the time frames in which I use when trading this particular strategy, and I'm going to be showing you the top-down analysis on how I approach the market every single day and take trades like this, high probability setups. Alright, so I already structured out everything I'm going to be showing you right now, starting from the basics. Alright, many of you think you already know how a bullish and bearish actually work, but if you don't know this, you can't fully master the strategy if you cannot know the basics. Alright, you build the foundation first before you move on to actually start taking high probability trades. Alright, so first of all, many of us know what bullish and bearish is. When it is bullish, we want to be buying; when it is bearish, we want to be selling. And when it is consolidating, I don't trade. Alright, I don't know about you, but when the market is consolidating or anything, I don't trade. Alright, so I don't trade when the market is consolidating or ranging. Alright, so first of all, this is a bullish market, yeah, when price is heading to the upside, and this is a bearish market when price is heading to the downside. And then this is a consolidating market in which you don't really know the direction of the market, but price is just ranging and giving that choppiness. Alright, so we're going to be breaking all this down in a few minutes. Alright, so just time to just watch this, understand it, backtest it, and trade it. Alright, just practice it, and you see that these things plays out almost every time in the market. Alright, so first of all, when the market is bullish, we want to be seeing break of structure to the upside. Like here we have a break of structure, and when we have a break of structure, it means the market is bullish. And once we have a break of structure, this low becomes protected. Alright, this low doesn't have to be broken, it's a protected low. Alright, so here we have another break of structure to the upside. We are still having more break of structures to the upside. Alright, and this low also is protected. Alright, this low is also protected. Alright, so another break of structure to the upside. This is a bullish market, and all this time you're seeing this break of structure, you want to be buying. Alright, you want to be buying. You don't sell when you're seeing break of structures like this. It is giving you opportunity. Alright, all that pullback is just giving you the opportunity to re-enter the market. So here, these lows shouldn't be broken. Alright, lows like this shouldn't be broken. If lows like this are broken, it means market is about to change. Like in a situation whereby we had this price took out this protected low like this, what we're going to mark out is a change of character. Alright, so this is now a change of character. Why? Because price has now broken the protected low. Alright, so once you see a change of character like so, what you should be doing is you should be selling. Right, you should be selling, and now you have break of structure. Break of structure is only the continuation, pullback, continuation, break of structure, and this thing keeps happening every time in the market. Alright, so that's it basically. So first of all, here again we have a change of character. But this is now in a ranging market. Alright, we don't want to play around when the market is ranging and doing all this stuff. Alright, we just want to stay out of the market when the market is doing stuff like this. Alright, so if you have a strategy that you trade concerning ranging markets, probably you can apply that, but personally I don't trade that. And this is our protected low. Alright, this is our protected low that we don't expect price to get to, but guess what, price got to it at this point. Alright, so that's a change of character. Alright, let me just change that. So that's a change of character. Alright, so change of character. Bullish, you are buying; bearish, you're selling; ranging, you stay out of the market. Alright, so the next stuff I want to be showing you is the entry for this stuff. Right, for this particular structure strategy. Alright, so in a bullish scenario, we have let me just change that. So in a bullish scenario, we have a break of structure. On a bullish scenario, we have a break of structure to the upside, and then after the break of structure, what should we expect? We should expect a pullback. Alright, so after a break of structure, we should expect a pullback, and when trading the pullback, the pullback is when you actually enter into the market. All right, the pullback is when you start to take your buys. You don't just want to be taking buys anyhow, so you can avoid and reduce the amount of losses you take. All right, so how do you know where to actually buy in a market like this? We use this Fibonacci tool. Yeah, it's a tool that has been provided by TradingView, so your platform could also support it. But when you drag it from swing low to swing high, all right, when you drag it from the swing low to a swing high like this, you can see that now you should be expecting the pullback, right, after you have taken it to the from swing low to swing high. All right, so this level, the 0.5 level is where you want to be taking your buys from. So you draw out a zone, but if you can spot it yourself, you can spot it, but this is just to simplify everything. So you draw out the zone like this, and from that zone is where you want to be buying from. All right, so from that zone you'll be buying from there. All right, so these are the stops. All right, you are buying from discount zone, you're buying from this discount zone, this discount zone. So discount zones like this are zones you want to be buying from. All right, you don't want to be taking early entries. All right, so same thing applies to the lower time frame. All right, so on the lower time frame, price is bearish and price has created a break of structure. After price has created a break of structure, this is our swing high and this is our swing low. All right, so in our swing high and swing low, we already have this break of structure confirming the bearish trend. So why price is confirming the bearish trend like this with this break of structure, we should be expecting price move like so to the discount level. So when you're selling in the premium level. Remember, you want to sell, but if you're buying in a discount level. All right, so this zone here is the discount, this zone here is the premium. So here you want to be selling. All right, so when price comes back to anything below here, you want to be selling. All right, so you can be putting your SL above. All right, take for example, you sold from here. When price go to this point, you'll be putting your SL above. All right, so when doing the examples, I'm going to be showing you how it can give crazy risk to reward. But first of all, let's just check out how this plays out on the chart. All right, so you can see a lot of market structure. Market structure everywhere. So that diagram is only to just open your eyes to see it. All right, so you can see break of structure. What the price do? Price came back to the discount level. All right, so price came back to the discount level. You can enter from here, put your SL beneath it, and target 1:3 or 1:2. All right, whichever is fine with you, you can target that. All right, you can see it. Same stuff. Break of structure, enter. Break of structure, enter. So here on this side, we have a change of character. All right. So right here we have a change of character here. After the change of character, if you were to draw from this swing low to this swing, from this swing high to swing low, you can see that that's a discount level, and when price came back to the discount level, you can sell and put your SL above it a little bit. Target 1:3. Alright, so simple stuff, bullish, bearish, do the same stuff. You can see it, price repeats everything every time. Alright, when you see a shift, no price about to change. This is a break of structure. So just go on your own chart and mark it out. Alright, break of structure everywhere. I can't mark everything. Alright, except I'm looking for a particular setup. Alright, so moving on to the next thing, time frames. Alright, so this is very, very important if you want to be trading this setup. Alright, so first of all, you need to have your higher time frame, you need to have your middle time frame, and you have to have your lower time frame. Alright, so your higher time frame is basically giving you the direction of the market. Alright, so this is basically giving the direction of the market where you should be trading in. Like, you don't want to be trading against the trend. Alright, if the market is telling you buy, you should be buying. The market is telling you sell, you should be selling. Alright, you don't just do trade anyhow. You don't just trade based on sentimental stuff, and you trade what the market is actually telling you. Alright, so in case like this, we have higher time frame, which is our bias, and middle time frame is the narration. Alright, so this middle time frame is the 1 hour time frame, and this one is basically going to tell you trade you are going to take, like what is the current trend happening right now on this time frame. Alright, so this one telling us the trend, the current trend, what is happening currently, and based on what those two time frames have told us is when we are going to be taking our entry. So if you are a swing trader, you can be going from the monthly or weekly down to the daily, down to the 4 hour. Alright, so if you are a scalper, you can be going from 15 minutes to the 5 minutes to the 1 minute for your entry. But as a day trader, this is what you should work with. Alright, so moving to the top-down analysis. Alright, so this has been broken down and has been simplified as possible. I'm going to be doing another chart example, so you can take those high probability trades and not just take low probability trades. Alright, so this top-down analysis is everything. When you come into the market every day, these are the trades you want to be taking every single day. So here this trend is basically your higher time frame, which is giving us our bias. Right, so on the higher time frame, you can see what are we expecting. You can see the break structure. Price was coming from the downside, moving up, came here, and it broke structure. This is the structure that was broken. Right, so when we have already seen the structure broken like this, now we are expecting that sell. Alright, so now we're expecting the sell, and now is the best time for the middle time frame to do its job. Now I want to find the narrative of the market, but first of all, before finding the narrative of the market, we don't want to trade blindly. So that is where our Fibonacci tool is going to come in. Alright, so drawing out our Fibonacci tool like this, you can see where is our discount zone. Alright, so our discount zone falls in this place. Alright, so anywhere from here is where we want to be buying. Alright, so we want to be buying from zones like this. Alright, so but we don't just want to take trades like this with huge SLs. Alright, we need those refined entries and good setups. Alright, good setups, different entries, spotting them, and you can find entries like this every single day. So when price gets back to this higher time frame discount zone, what do you want to be looking for? Alright, so you can basically see we are having break of structures to the downside. You can see break of structure, break of structure, break of structure. During this break of structure, you can be catching moves, you can be selling. Alright, you can be selling. Alright, you can be selling down until you have a change of character. Alright, so the change of character is only going to verify that okay, the market is done doing all those the market is done following the narration time frame, which is our 1 hour. And here, once we get to this box, we want to be looking for a change of character on the 15-minute time frame. On that 15-minute time frame, here is it. Alright, so here is it on the 15-minute time frame. Here's what we want to be looking for on the 15-minute time frame. Alright, so here's it. So we want to be looking for this change of character. Once we have a change of character, you are going to map out your Fibonacci tool on that lower time frame. Alright, so if I was to draw my Fibonacci tool from swing low to swing high, here you can be taking your buys all the way from here. Alright, so you can be taking your buys all the way from here and putting your low beneath it like this and targeting all the way to the swing high. Alright, so this particular trade, this particular setup gave about 1:4. This particular setup gave about 1:4. Alright, so this is a 1:4 trade. So with this 1:4 trade, if you had risk about $100, you'll be getting about $400. If you have risk on the small account, $10 account, $10, you'll be getting about $40 on this particular setup. Alright, so that's just the simple setup. If you want to screenshot it, you can screenshot it. So let's just look at that. Let's search for more scenarios for this top-down analysis. Alright, let's take a look at this example. So here, price gave us a break of structure down here. You can see the break of structure, and after having this break of structure, this is our protected low. This low don't have to be taken out, so this is actually the protected low right above it here. And so let's draw out our Fibonacci tool like so. So here is the premium zone, because in scenario like this, we want to be selling. Alright, so let's just move down to our lower time frame, find our change of character, and then we'll be entering the sell. Here is the zone, the discount zone on the lower time frame. As you can see, this was the change of character, right? So we already had the change of character in here, as you can see. And if I was to draw out this from swing high to swing low, you can see, should I say, okay, this is the swing low, right? So this is the swing low. So you can see price came back to the swing low. You can take your SL like this, and then you target all the way to the downside like this. Alright, and target all the way to the downside. Let's look at another example. Here we have another sell opportunity. Here you can see the break of structure. Let's draw out our Fibonacci. You can see from swing low to swing high, from swing high to swing low. Right, so this is our discount, our premium zone. So let's move down to our 15-minute time frame. So on the 15-minute time frame, price didn't quite come back to it. It's not that clean, but when price tapped it, you can see after the break or after the change of character, you can see if we draw out our Fibonacci 2 from swing high to swing low. Okay, so this is a pretty good trade. You can see from here, you can take your sell from here, put your SL above it like so, and then target it down to the swing low. Alright, so you can see them switch trades like this. Alright, so that's just how you trade setups like this. Alright, so I send daily analysis and signals like this on the Telegram channel, but I'll be keeping the link below the description of this video. Alright, so we have advanced entry models that are way advanced than this. Alright, so I just send about 1 to 2 signals daily, alright, with 70% accuracy rate. Alright, so you can be taking signals like that and boost your win rate. Sometimes I might be dropping the setups, you can study them, and then you can improve your trading. Alright, so just like this video and subscribe.